Welcome to the C-Suite podcast with me, Graham Barrett. I'm here at Pay360, a fantastic event that has brought the global payments conversation to London. Together with my colleague, Debbie West, we are going to be interviewing a number of the speakers and attendees from the event, and we really hope you enjoy the conversations.
Well, I'm delighted to be joined by Mike Elliff, who's Chief Revenue Officer and EMEA CEO of Chargebacks 911.
Hi, Debbie. It's great to be here. Thanks very much for having me.
Oh, lovely. It's great to meet you. Thank you so much for joining us today. So could you first of all tell us a little bit about Chargebacks 911?
Yeah, I'd be delighted to. So Chargebacks 911, we're a global technology company. We focus on leveraging data, technology integrations, and AI to help merchants and their payment providers prevent and defend chargebacks and disputes.
Okay, excellent. So what are the biggest trends you're seeing here at Pay360 and in the payment sector as a whole?
Yeah, indeed. It's a really busy show, first of all. There's a lot of energy here, which is great to see. There's a few things that I'm sort of taking away from what I've seen so far. I think the first is there's a big focus on momentum in the industry. I think the news around the national payments vision and the execution of that is driving a lot of conversations at the conference. It's about putting payments as a sort of centerpiece of growth in the UK economy, and also making the UK a leader in global payments as well. So the national payments vision is a big talking point, and I think spinning off from that, there's a lot of regulatory considerations as well. We're obviously seeing the PSR being merged into the FCA, and really the regulators having to become more proactive and pragmatic about infrastructure development and generating more growth and innovation in the payment space as well. And then I think as you walk around, you see a lot of payments optimization companies. There's a lot of focus on how you use payment strategy to drive revenues. And then on the other side of that, there's a lot of focus on fraud and disputes and consumer protection. So those are some of the big things I'm seeing and hearing as I walk around.
Yeah, that's really interesting and certainly exciting times. So tell us a bit more about chargebacks. Why are chargebacks increasing? And what does an effective chargeback management system look like?
Yeah, so first of all, for anybody who doesn't know, chargebacks effectively are where a consumer calls their bank and challenges or tries to reverse a payment, based on various reasons. Sometimes genuine, sometimes less genuine, and therein lies the problem for a lot of merchants. We have seen, obviously, through and since the pandemic, a huge growth in online payments. But we've seen an even bigger increase in chargebacks over that period. Starting in the US, but also now it's a global phenomenon. And I think what we're seeing is an increased awareness from consumers around fraud and their protections, and chargebacks fits into that. And I think partly fueled by social media, I think there's an increased consumer awareness around chargebacks. Customers increasingly are calling their banks when they don't want to pay for something, as opposed to kind of more traditional kind of refund channels. Sometimes that's genuine, sometimes it's not genuine. And I think consumers are not really aware of the cost and effort and pain points involved in the chargeback process when they initiate a chargeback across the payment system. And that's obviously, those are the pain points that we're obviously trying to help with for merchants and for payment providers.
So, Mike, you mentioned that chargebacks are a global phenomenon, but how do you view the UK market's role in Chargeback 911's growth strategy, and why is the UK such an important focus for you?
Yeah, I think the UK is very important for us. We've had a significant presence here now for 6-7 years. The UK is, first of all, it's a sophisticated market, so there's a lot of online commerce, and therefore it's a really interesting market, both in terms of card disputes, but also the rise of open banking and areas like that. So it's a really interesting market, first of all, and it's an important base for us, across Europe. But also, I think, as you can see as you walk around the conference, Pay360, it's a real center of payments innovation. And a lot of what we're doing is partnering with payments providers to help them help their merchants. And so it's a fantastic place to be doing business. And we've got a lot of great relationships and partnerships based in the UK.
Yeah, that's excellent. So what are the biggest impacts to you in terms of AI? What impact is AI having on the payment space?
Yeah, so I mean, AI obviously is a huge thing at the moment. There's a big talking point at the conference in terms of technology trends. There's obviously a lot of AI being developed to combat fraud. But also there's a lot of AI being used increasingly as we sort of everybody's talking about deep fakes and various other ways that AI is actually being used by fraudsters as well. So there's a battle going on there, a sort of escalation battle around fraud and with fraudsters trying to prevent fraud. We actually use AI on the back end of the transaction. So when a transaction has happened, we're basically using AI to try to validate transactions, once they've happened, make sure they were done by the person that we think that they were done by, and also to help merchants pull together all the pieces of data that they need to be able to prevent or defend a chargeback. So I think AI is incredibly important. We've been using it for years. And and I think it's particularly helpful in the world of chargebacks, which has a lot of rules. There's a lot of processes, a lot of manual processes, and it's a very arcane process. So the more you can do to automate that through AI, through rules, through machine learning, then the less painful it is, I think, for all the participants involved.
Yeah, absolutely. That makes total sense. Well, this has been really interesting. Mike Elliff, thank you very much for joining me today.
Delighted to join. Thank you very much.
Okay, joining me now is Konstantin Vasilenko. He is the Chief Business Development Officer and co-founder at Paybis. How are you doing today?
Hello, guys. I'm doing amazing.
Yeah, well, thank you very much for joining us. Could you start with an introduction to your company, to Paybis?
Thank you for the invitation, of course. Paybis, what we do. Paybis is a crypto fintech. We've been around for 10 years. We help individuals and companies to make crypto simple. Right? So we help people or companies to convert fiat to crypto and convert crypto to fiat. Plus, we do additional embedded finance and B2B products where we help companies to start offering similar services to their customers. Right? So in that sense, we serve retail customers, we serve business customers, and we provide B2B solutions which can be white labeled, and other companies can start providing the same services that we do to their customers.
Let's come back to embedded finance in a moment, but let's start with how you help your clients, with your customers, with their crypto needs, specifically their crypto liquidity. So can you just talk us through that process?
Yeah, let me explain what do we mean with crypto liquidity, right? So the biggest, let's say, problem that we solve for other companies is for them to be able to convert their money in the bank account to stablecoins. Stablecoins are now very popular means of let's say payment between the businesses, and this is kind of the main thing that companies need help with, right? Because you need to be able to convert. Some companies convert millions per day into stablecoin, and they need to have a very easy and simple way to do it at very affordable and predictable prices, right? Nobody wants to lose money on conversion. And we help big companies in the industry like acquirers, PSPs, neobanks to convert their own funds into crypto so they can sell their partners, or we help them to convert their partner funds or their merchant funds into crypto so they can settle their partners. Plus the other way around, right? So any movement between stablecoin and fiat, this is where we step in, and we have different solutions for different clients with different legal setups to help them with that.
Okay, makes sense. And then moving on to the embedded finance part of things, so how does that play into this whole space?
Imagine you're a neobank or EMEA, and you serve your business customers, right? And your business customers have a need to get crypto liquidity. So what they do, they go somewhere on the market, centralized crypto exchanges, companies like us, for example, right? They come to us directly, and they want to get crypto liquidity, right? So first of all, your business partner of your EMEA would make an outgoing bank transfer to us, for example, right, or to any other similar company. I mean, and your compliance has to understand where they're sending money, right, because it's obviously transaction monitoring. Plus, you understand that the customers they have a need to buy crypto or get crypto liquidity, and you are kind of leaving the money on the table in the sense that you're not generating any additional revenues out of that, right? And then your customers are using your services, they're using somebody else's services, that somebody else might introduce features that you have, and you might lose the clients, right? So it's also about customer retention. So the idea of embedded finance is that you can actually give your customers the service they want and they use on the site, but now you can start doing it yourself. So it's basically a white label OTC desk or crypto liquidity solution inside your own company that you can serve your own customers maintain the relationship with them, make it easier from the compliance perspective because they interact with us and the compliance would be more happy. Plus you have additional revenues that you can generate by having your markup on your clients and having some bespoke prices for your clients. This is kind of the embeddable thing inside your own UI interface for your own customers.
Sure. So that's kind of the how. Let's move on to the why. Why are businesses turning to stablecoins?
That's a very good question. I mean, during the last 2 years, if you look at, total market cap of issued stablecoins, it is growing constantly. And there are, of course, many reasons why it's growing. It's also due to crypto adoption and, more people are into trading, but more and more businesses are turning into crypto as a payment medium because, standard bank transfers, especially cross-border transfers through SWIFT, as we know, they take days, right? They take days, sometimes the payment gets lost and you don't even know where it is, and it can take up to a week to arrive. I mean, businesses need to be fast. They need to work fast. They need to turn around their cash as fast as possible because, with a certain cash amount, you can maybe increase your cash flow, increase your volumes 3 times if you have a quicker turnaround. So crypto or stablecoins, they allow to get your payments faster. They are more visible, predictable because it happens on the blockchain. From the compliance perspective, with all the regulations worldwide, it became as simple as accepting bank transfers. And it helps businesses to basically be fast, be nimble, and be competitive in their line of business. Many businesses turn to stablecoins because they want to outcompete their competition as well.
So how do you see this space developing then? Do you think, you just mentioned regulation there. Is regulation going to make it easier or more difficult to do this?
I always is pro-regulation. People might say, okay, regulation kills, let's say, decentralization in crypto and so on and so on. But I believe that regulation is about consumer right protection, right? And as you can imagine, more people will be trusting cryptocurrencies, Bitcoin and other cryptocurrencies and stablecoins if they understand that it is as simple and as regulated as their normal bank transfer, right? That if there is an issue with your service provider, there is somebody to protect your rights, right? And that's kind of the beauty of it. So my belief that in 10 years from now, stablecoin transfer will be as low risk as a SEPA transfer right now, right? So everybody will be treating it as a standard, as a de facto standard without any surprise. For example, we talk to some partners here who are clients of Bank of Barclays. Bank of Barclays right now is intolerant to crypto. It's simply because I believe they still don't understand how to manage risks about it. And I believe in 10 years, things will change. And even Bank of Barclays will allow its customers to get into stablecoins. That's my belief for the future.
I'd like to invite you back on the podcast in 10 years to see if that has played out.
Let's do it. Let's make a bet.
Konstantin, Vasilenko, thank you for joining me on the podcast.
Thank you. It was my pleasure.
Well, I'm delighted to be speaking with David Bibby, who's a senior manager in the international product strategy team at Discover Financial Services. So, David, welcome to the podcast.
Thanks for having me on.
I understand you just delivered a talk here at Pay360 about Discover's partnership with Blue Code. So, what does that partnership entail, and why did it make sense for you both?
Sure, yeah. So Blue Code is an interesting startup in Austria and Germany. And they do account-to-account payments via currently QR codes and barcodes.
Okay.
Into that proposition, they also have loyalty programs. They have some kind of fuel schemes, gift card type purchases. So kind of an integrated purchase and additional value adds for the cardholder, essentially. What they do have a challenge with is acceptance footprint because they're new. They have to go and recruit merchants directly. They have to get optical equipment into shops and so on. So the partnership with us entails us giving them our NFC technology, which they can embed in their wallet, which then means their customers can transact at any one of Discover's contactless-enabled merchants anywhere in the world. So from that point of view, it's kind of giving them that footprint to give them a boost to really get their product to a much wider audience and to pick up their transaction volumes.
Excellent. Yeah, that sounds like a great partnership. And can you give us some insight into how you work with local payment systems around the globe?
Yeah, sure. So Blue Code is just the latest in our kind of suite of what we call network alliances. So what we will normally do is, in a particular market, like for example, in Brazil, we've partnered with Elliff, which is the local domestic payment scheme. They give us acceptance at their merchants within Brazil, and in return we give them access to technology if they need it, and also access to our network with bins that will interoperate across the whole of the Discover Global network. And what that means in practice, the ELO cardholder from Brazil can do transactions anywhere where our cards are accepted, which is on our own network, but also the networks of our payments partners. So, for example, we've got a network alliance with BK in Turkey. So Brazilian cardholders can go to Istanbul and use their Brazilian card at a Turkish merchant. Transaction gets routed through us back to the issuer in Brazil, and everybody's happy.
Yeah, that sounds amazing, but also quite fragmented. So do you see this fragmented, localized payment approach continuing, or do you think there's going to be a degree of consolidation?
Yeah, I think generally the industry is seeing quite a bit of consolidation anyway. Obviously, our aspiration is to bring all of those together kind of in the Discover Global network. It's very hard for local schemes to get traction outside the domestic market.
Right.
It's kind of analogous to the Blue Code thing where, if you have to go and recruit all the merchants and acquirers yourself, it's quite a big undertaking. If you can plug into an existing network, it makes it so much easier. So certainly for us, we'd rather have people come together under the global network umbrella that we offer, and we get that kind of interoperability everywhere in the world.
Yeah, that makes perfect sense. And so what does your strategy look like moving forward? Will we see more partnerships like the one you've made with Blue Code?
Yeah, I think the fintech sector generally is really interesting to us. So I think it's somewhere where we're offering a real opportunity to smaller fintechs who are in that kind of scale-up phase. They're going to struggle to get a lot of kind of uplift in volume if they can't get the acceptance network growing. If we can plug somebody else into our network, like we did with Blue Code, by giving them our NFC technology, it suddenly kind of gives them a big boost as to how they can put like the rockets underneath their own product, and also brings their volume and their cardholders onto our networks, which is kind of win-win for everybody.
Yeah, that sounds great. Brilliant. Well, David, Bibby, thank you so much for sharing that with us today.
It's been a pleasure. Thanks for having me.
Okay, joining me now is Robert Turner-Kerr, who is Senior Relationship Manager, Digital Transactional Banking at iFast Global Bank. Rob,
hi there.
How are you doing?
Very good. Thanks to yourself.
Yeah, good. Great to see you here at Pay360. Let's start with an introduction to iFast Global Bank for those that don't know you.
Yep, absolutely. So iFast Global Bank has been in business for around about the last 2 years in the UK. We are a subsidiary of a Singapore-listed wealth tech with a market cap of 2.32 billion, and we have offices across 6 locations: UK, China, Hong Kong, Singapore, Malaysia, and Bahrain. And we have 4 specific lines of business. One is a money remittance business in the Middle East, and 3 lines of business in the UK. Personal banking, which has over 30,000 customers since launch. Regulated banking, supporting the payments industry, as well as a SME book of business.
Okay, and from the UK perspective, what are the aims, what are the objectives, what are you trying to do?
So we are obviously looking to expand our customer base in all of those areas. From my perspective, we're supporting the electronic money institutions, authorized payment institutions, and small EMIs, as well as other regulated businesses, including brokers and wealth platforms, with safeguarding accounts and client money accounts in 8 currencies. One unique element of our offer is that we pay credit interest on all 8 of those currencies, which is pretty unique in the market.
Now, you mentioned safeguarding there, so I'd like to get your opinions on the CAS safeguarding rules that are going to be coming in shortly. What is going to change when they are implemented?
So the first thing I have to preface this on is that the consultation is in. The responses to the FCA have also gone in. And the end state, which is due to start from June and last for 12 months, is a little bit unknown. But if these rules come in as written, they will be fundamental changes to how payment institutions are required to safeguard their funds. The first big change is that they will be a statutory trust under UK law. One of the challenges for UK institutions with that is that in many markets, many countries, the concept of a UK legal statutory trust doesn't actually exist.
Okay.
So if you look at it from one perspective, a lot of these EMIs will have relationships with banks and safeguarding counterparties outside the UK. But if those countries don't recognize a statutory trust, it means that there'll be more of a requirement to use a provider within the UK. That's one big change. The requirement for a statutory audit every 12 months is also coming in. So instead of maybe using a specialist firm for your audit, which is the case today, you would be you're required to have a statutory auditor. So a Big 4, Big 10 auditor in place. The other massive change is the idea of segregation or segregated accounts, where you can hold an account which is not safeguarded, and you can allow customer payments to come in, your client money payments to come in and go out of those accounts goes away effectively. So everything coming in to safeguarding must go directly into safeguarding. There's no more 24 hours, which is the current ruling, and everything going out from safeguarding must be a direct payment on behalf of your customer. So this is going to cause operational challenges for many payment institutions because they currently will be debiting a safeguarding account to fund a clearing, for example, SEBA or BACS potentially, and also they'll be debiting a safeguarding account to fund an FX transaction. So going forward, if the rules come in as written, EMIs are going to have to find a new source of working capital to actually fund those transactions with their own money, wait for the confirmation that the settlement has occurred on the other side before being able to actually debit safeguarding. So, that's going to induce a lot more cost potentially and friction in the operational flow of the activity.
I'm just thinking it sounds like pretty fundamental changes.
Yes.
I don't know if there's enough maybe awareness around at the moment. Are financial institutions prepared for this?
Well, it has been pretty well publicized, and certainly it's something I'm raising with all of my customers and also prospects and making sure they have a copy of the consultation. But you're absolutely right. I have spoken to a number of EMIs here today, and not all of them are aware of this, and it is fundamental that they get themselves aware before it's too late to do anything.
Definitely, yeah. Well, let's keep on the subject of regulations because there are also new rules surrounding virtual IBANs, aren't they? Can you give us an overview of that and what that means?
Yeah, sure. So again, just to be clear on this, these are EU rules, so part of the new AML directive in the EU, and doesn't obviously affect UK right now. But in essence, what the EU have done is they've now regulated virtual IBAN as a product, and they've set down a number of rules that need to be followed by the bank or issuer of the virtual IBAN. There are three key elements to this. One is that you are now required to identify and verify the underlying holder of that virtual IBAN. So it's no longer sufficient to do KYC and KYB only on the EMI. You also have to do a level of due diligence on the business or individual who is owning that virtual IBAN. Second is that you have to ensure that you hold that data in your own systems for overnight monitoring, sanction screening, etc. And the third element to this is that you are also required within the payment message or payment instruction itself to be able to identify that this is actually a virtual account, right, a virtual IBAN. So none of these practices are currently in place in general in the UK. But as we know, when the UK acts, the EU often will follow, and sometimes when the EU acts, the UK will often follow. So if these changes come in, then it will be a big, there will be big consequences for existing issuers. iFast has effectively built our product, virtual IBAN product, on the basis of this legislation. So we will be following all of these requirements, in advance, future-proofing the product for our customers.
Yeah. Well, it sounds like there's a lot to take in with those two rulings. Yeah, absolutely.
Yeah.
Just finish up, aside from regulation, what do you see as maybe the next big leap in digital and mobile banking?
So I think, and we're seeing this already. There's a general consensus that it's no longer sufficient just to be able to offer payment services and card services and foreign exchange to your customer base. Investments are now something that is also a demand, particularly in the high net worth space. So we're seeing, of course, therefore, EMIs are going for permission 4, so that they can provide some of these investment services to underlying clients. And of course, iFast, being a wealth tech company in Singapore, is very well placed to support access to these types of investments, both for EMIs, but also individuals. And of course, we also offer a white label solution, to enable our end customers to provide these services. So again, iFast, given our banking license and given our other licenses, is very well placed for this leap forward into the future.
Yeah, sounds like you're very well placed indeed. Good luck with your future growth. Robert Turner-Kerr, thank you for joining me on the podcast. Well, that's it from Pay360. Thanks again to all of our guests who took the time to chat with us today. Don't forget, if you've enjoyed the show, please do give us a positive rating and review on your usual podcast app. And if you want to get in touch with us, you can use the contact form at csuitepodcast.com. And you can find me, Graham Barrett, and Debbie West on LinkedIn. But for now, thanks for listening and goodbye.